Yo, welcome back to another episode of Real Talk with JD. I'm your host, JD.
Oh, man.
And in today's episode, we're actually going to talk about three major updates to the housing world, right? Number one being Fannie Mae has dropped their minimum credit score of 620 requirement to qualify for desktop underwriting. Big news. All right. Number two, we're going to talk about the 50-year mortgage proposal that has kind of died down, rightfully so. And number three, we're going to talk about the new idea that's replacing it, which is the portable mortgage. All right, so let's break it all down. So, as of November 2025, Fannie Mae no longer requires buyers to have a score of 620 to qualify for desktop underwriting. So, what does this mean? This is huge news for first-time home buyers, especially those who've been, trying to work on their credit profile but just can't get past that 620 number, right? Now, I want to say, credit is still important. Okay, it's not that you just automatically qualify now, but what lenders are going to do is they're going to actually examine your full credit profile. So you're not just getting stopped at the door now if you have a score less than 620. They're going to look at your full financial picture. Okay, we're talking debt levels, income, assets, etc. Okay, and so for example, buyers who have like a clean rental history, on-time payments, etc., but they don't have traditional credit, you could now potentially qualify for a home, okay? But again, I want to emphasize, credit is still important.
Do you understand?
All right. So my advice to people with this change is like, hey, if you've been working on your credit, continue to work on your credit, but also make sure that all of the other aspects of your financial profile are looking good, and you might be able to qualify for a home sooner than you thought you could. All right, now let's talk about this 50-year mortgage, okay? Now, you may have heard the idea flying around the past month or so about a 50-year mortgage. And the catch was like, or the draw to it was, oh, you'll have a lower monthly payment. Cool, true, right? But here's the catch. The monthly payment wasn't that much lower than the 30-year fixed mortgage. Not only that, but your equity would build a lot slower, okay? Meaning that when you went to sell or refinance later, it would be a little bit more difficult, okay? And you pay double, just about double, the interest over time, okay? And you would still be paying on a mortgage into your retirement. And like, that's kind of like defeating the purpose, right?
Stupid.
So in a market already suffering from affordability issues, a 50-year mortgage would treat symptoms, not the disease. Okay, so fortunately they have gone away from it, and they've now proposed a portable mortgage, which I'm about to break down for you right now. And while it might sound like a smarter solution, let's figure this out. So a portable mortgage would allow homeowners to take their current existing mortgage with their current rate, right, into the next house. Cool. All right. The idea here is to free up inventory for homeowners who are currently stuck. Like, they have a 3% interest rate, and they're like, I'm not going back out into the market to buy a new home at a 6.5, whatever, 7% interest rate. Why would I do that? Okay, true. But here's the catch. First-time home buyers would now be competing with people who are carrying a below market rate into their next home, right? So it doesn't do much for first-time home buyers. And there's still the issue of covering that gap. So now you're an existing homeowner, cool, right? You're bringing in your 3% rate and mortgage, everything over to the next place. Okay, but this place costs $200,000 more than whatever. You got to cover that gap. So now you got to take out a loan for whatever the market rate currently is on that, plus your current mortgage. It's just a lot. It's a lot going on, right? Bottom line, it doesn't seem like a great solution. I'll say this. I like that they are proposing these ideas and coming up with different things, but we need solutions that are going to solve the affordability issue crisis that we're having here in the United States, right? We need solutions that are going to address home supply and price pressure, right? Not just allowing people to take their low rates into the next one. So in today's housing market, look, it's easy to get caught up in headlines, but not every idea is a real solution, all right? Dropping the minimum credit score, though, that's a win. That's a win, okay? And it could be your time. Portable mortgages, whatever. It's not a fix. All right. Anyways, if you're thinking about buying, selling, or investing, it's important to understand the short-term benefits and the long-term realities of said investment. All right. That's all the time I got. Please don't forget to like, subscribe for more real talk. If you're ready to explore your buying options and you want to even just see your full financial profile to see if maybe I qualify now for a home, please DM me, message me, whatever. This has been another episode of Real Talk with JD. I'll see you on the next one.